Welcome to our presentation. Today we will be talking about Telstra. Telstra is Australia's leading telecommunications company, which was first listed on the Australian Stock Exchange on the 17th of November 1997 as TLS. It has quickly grown since then and has now become one of Australia's leading blue chip companies in terms of market capitalisation. Telstra's current market capitalisation is $44.481 billion. Its current stock price is $3.74. Its PE ratio is 14.98 and dividend yield is 3.85%. Telstra has a total quoted shares of 11.893 billion. Telstra is part of the telecommunications services industry and communication services sector, and its major shareholders are HSBC custody nominees, owning 19%, followed by JP Morgan nominees, owning 11%. Telstra has provided telecommunication and information products and services through its Australian and offshore operations. Telstra provides a variety of products and services including mobile, data and IP, fixed broadband, network application and services, and digital media. It provides 17.7 million retail mobile services, 4.9 million retail fixed voice services, and 3.6 million retail fixed broadband services. Its service include Telstra Retail, Global Enterprise and Services, Telstra Operations, Telstra Wholesale, and Telstra InfraCo. Telstra has also recently publicised that they are the retail service provider for the NBN network and are working on cutting costs because of this venture. They will be investing $3 billion into their network to improve customer satisfaction, and because of this, there will be around 1,400 job cuts. They have achieved this in 2019 with a 6% decrease in costs. Telstra is also reducing costs by recent addition of 378,000 new mobile customers and the removal of 4 management layers.
Telstra operates in the information media and telecommunications industry, which is estimated to experience strong growth in the next 5 years. The Australian economy is considered to be one of the lowest risk countries in the world. Therefore, Telstra presents a very attractive option for investors. Out of 54 countries analysed, Australia was found to have the second lowest risk in terms of projected changes in GDP and comparative situational sensitivity. Most of Australia's risk is associated with threats in the global economy, such as a global downturn and decrease in export deals, whilst the biggest national threat is a decline in the housing market. But overall, Australia's economic growth is expected to surge from 1.9% in 2019 to 2.5% in 2021. Within the relatively stable Australian economy, the industry is estimated to experience growth, which will be driven by significant technological advancements and increased consumer data demand. Telstra is on the forefront when it comes to meeting consumer data demands and is the first to implement 5G, a wireless network with unprecedented download speeds. Potential risks associated with investing in Telstra is a strong presence of regulation who prevent acquisitions and expansions. And then when it comes to the use of 5G, there is a strong perception of health concerns related to the concentration of radiation used to provide the service. But as it stands, Telstra has great investment potential, being the dominant market leader in an industry of growth in a stable national environment.
Telstra is the largest stakeholder in Australia's telecommunication industry, establishes the benchmark for many competitors in a highly competitive and concentrated market. 4 companies control 79% of all revenue, with Telstra holding an intimidating 41.5% share of the market, with the other competitors being TPG, Vodafone and Optus. High government regulations have ensured extreme competitiveness in the industry, but at a price over regulation. The main exemplary factor being that NBN Infrastructure is a government-owned company, making them a monopoly supplier to all competitors. The industry has entered the mature stage of its life cycle. Innovative technology of NBN and a rising demand of wireless mobile services are increasing costs, but also driving the competitive landscape. Telstra, being the leading stakeholder of the industry, presents a good investment for investors, as the technology-driven demand will benefit Telstra the most in the industry. Telstra has been identified as a good investment to investors due to a detailed analysis of their financial statements. Queries over their liquidity ratios are quickly resolved by understanding their average results are due to a large investment in capital infrastructure required in the telecommunications industry. Asset management ratios employ an efficient management of inventory, as well as a strong receivables turnover rate, with the only deterrent from the results being the asset turnover ratio, which again can be resolved by understanding the capital investment required of the industry. Leverage ratios depict the firm manages its debt to asset ratio well, but a question mark has been raised over the possibility of the firm using finance to operate. Telstra posts leading net profit margin compared to its competitors, but it could always be improved with similar results on their return on assets and return on equity ratios. This could be caused on an industry level by the impact of the NBN infrastructure and the changing landscape of the industry.
We used various valuation models and determined that this stock has an intrinsic value of about $2.49, which is an average based on all the valuation methods we've used. Our projections illustrate that the fund is expected to have sufficient free cash flow and equity for the next 5 years based on a continuation of the current rate of growth. We've used the Gordon growth model to illustrate how a higher level of growth might affect this share. Our model shows that if the company can retain more earnings for growth, this might have a positive impact on their share price. This would have varying impacts on different aspects of the business though, such as having to pay smaller dividends to its shareholders to achieve more growth and having higher net income for a heightened level of return on equity. Our recommendation is buy based on the current unit price of $3.63. We believe this stock is a good investment because it has healthy financial ratios, it's got good free cash flow, it's reasonably priced at the moment, and the industry outlook is good for the future of telecommunications in Australia. Telstra continues to hold the majority share of the telecoms business in Australia and is heavily invested in related infrastructure all over the country. This is not expected to change.